Good afternoon, everyone. Uh, Welcome to this panel. As mentioned that this panel, we are actually trying to open up the Horsecart, who will be the horse in the next decade. And my name is Jatin, and on my left, I think we have already introduced, is Hitesh, Rahul. Vishwas doesn't need any introduction. I think you can see him from Chandrayaan, and we have Hari on the extreme left. So, there is so much innovation going across in various sectors, and payment is obviously not an exception to this. And when it comes to innovation, and obviously the forefront, India leads this forefront when it comes to payment innovation. So in India, as we see, we no longer talk about cash and check, because I am a very traditional old banker where, done checks and cash clearing and all. I think no longer we talk about that. We talk about technologies. We talk about all the horses which helps to push this cart of payments, digital payments, technologies like API, blockchains and all. So I think those are the kind of discussions which we have as of date. Today we have a very esteemed, as I said, panel. Since the introduction is done, let me jump into the questions and make this session very captivating. So at the end of the day, at the end of this session, at least we will get some insights in terms of the future of payments. So this question is to all. Just wanted to understand from all of you on what are your views? Considering the fact that India, 10 billion UPI transaction, we contribute just merely 46% of the world's real-time payments. Aren't these an incredible numbers? 46% of the world real-time payments, I feel really proud about it. And considering all these growth, what are your views and what has changed, or what are these factors? What are these horse which help this cart to move? So, you can start from, yeah.
So if you see the large part of the, real-time payments, are through UPI, and I think two factors which contributed largely, according to me, are one is the widespread, internet penetration. And second, if you see, if you look at merchant, right? If you try to make a payment through a credit card on the merchant outlet, many times, merchants are not that supportive of, receiving payments through a credit card, because, at the end of the day, they end up paying, anywhere between 1.8 to 2.5% kind of an MDR, right? And plus, you receive money, let's say second day or third day, right? So, the point where, with UPI, below, let's say, a certain threshold, there is no kind of, payment to be made by merchant, for the payment he receives, and also instant, right? So most of this, merchants have a very short, working capital cycle, and they operate on a very thin spread and thin margins, right? So for them, it's very important that they get the entire payment, and second, they get it instantly. So I think, and you go and ask any dukandar, आप जाके credit card try करो, he will say कि POS machine is not working, there is some technical issue. So most of the time they avoid, right? So I think, but with UPI now, they know that, it's kind of instant, and, I don't have to pay anything for it. So I think these are the two major driving factors, according to me, which has, catapulted the, the overall transaction volumes on UPI.
Yeah, thanks. And maybe I'll add a couple of points beyond this. I think at the overall level, I also think the overall focus and push from the government and regulator in general about the digital payments has been one of the very overarching factors. And this is visible in almost every forum, every new kind of policy decisions that come. Beyond it, I think, and just kind of touched on UPI, The way UPI is built, it also enables a lot of ecosystem players to build new innovative things, and that also leads to a lot of adoption. Like when the UPI was launched, it was primarily the third-party apps like PhonePe, Google Pay, which really kind of helped the adoption of P2P payments. Now, having said that, payments has one side, which is consumer, the other side, which is businesses or merchants who accept payments. I think in last 6 to 7 years, a lot that fintechs have done or say technology has done, which has made acceptance of online payments or offline payments for businesses very easy. I still remember like 6, 7 years back, it used to take, say, a team of software engineers working for 2 or 3 months for a large enterprise to start enabling online payments. And now, like it's almost like a single API integration, or it's just like a no-code thing, which very small merchant can start payments, accepting payments online easily. So I think that's one of the major factors in online as well, and that's why we have today, say, millions of merchants also accepting payments. Also in offline payments, I would say overall the cost of doing transactions from a fixed investments or a machine rental perspective has significantly gone down. Earlier, I think it used to be more than 10 to 12,000 rupees machine, maybe about 1,000 rupees monthly rental, which has gone to say a few hundreds with innovations like Soundbox, etc. So I think fundamentally it's the overall vision by say RBI or a regulator or government, and also a lot of innovations which is technology-led, which is helping merchants to accept payments far more easier, to manage risk better, to bring down the overall cost of transactions, and of course the benefits like real-time settlements and all those things has really helped us to bring to this level.
So Jiten, I guess your question was how did we get here over the last decade, doing merely 10 billion UPI transactions a month or 46% of the global, right? Look, over the last decade or so, the secular trends for the digital payments was already there, and it was created by a lot of facts that were already there in the country. There was a rapidly growing middle class, which will reach around 46% of the population by 2025. Urbanization meant easy accessibility. 36% of people now, Indians, live in urban areas, right? Add to it all the government efforts that went in creating this digital ecosystem. UPI would not have happened if that Jan Dhan Yojana was not there, right? 400 million bank accounts were opened, right? And then add to a lot of government policies, be it the Aadhaar, be it eKYC, e-sign, account aggregator, ONDC, and all the new things that are coming in, right? And add to it 2 more other factors God created. One was demonetization, and then the other one was COVID, right? Both were God created. But all these, overall factors led to the digital adoption. And then you put UPI, which was a mobile first, right? And then you get in zero MDR, right? And all those kind of it becomes easier. So that's why we are here today, because of all these factors.
Yeah, when I look at it, I put it both on the merchant ecosystem and the consumer ecosystem, right? The last decade has been driven through this entire cart running in much faster, primarily from the merchant ecosystem, looking at building an infrastructure. I think the basic infrastructure of putting in place robust systems for transaction processing has helped doing it, plus addition of multiple form factors. I think creating multiple form factors like QR or mobile POS has helped in terms of acceptance infrastructure growing onto it. From the consumer side point of it, I think it is about building the experience at the point of sale, be it an online or a merchant transaction. Both building that experience for the consumer at the point of sale has helped increase the payment transactions volumes.
I think that's really interesting. So it spreads across a very large landscape, from a consumer to a merchant to a corporate kind of a payments. And rightly so, the runway was set. I guess all the players, right from the pilot and others, had to play their part. And I mean, everyone seemed to have played that part. So I think, let me jump to the next question, Hitesh. This is specifically to you, because from a financial institution, as being a banker, sometimes I'm sure these are the questions which not only spoken in the corridor, but in large meetings, that we actually have the technology which is core banking, which is pretty old, sometimes challenging. So how as a financial institution, are you adapting to the changes in the fast changes to the payment landscape? And what are the strategies that to ensure that you are relevant or competitive in the when we are actually, with our fintech partners?
So, the rise in the payment volumes in last, 4 or 5 years is kind of enormous, right? And all the banks or financial institutions, the platforms, either core banking, they're actually not made, considering this, kind of volumes, and that's where you see when, so much of, transaction flow comes in, you also need to ensure that there is no downtime, there are no rejections. So banks have kind of invested heavily in kind of, changing or sometimes, upgrading the existing infra. The, second aspect is that how do you, participate in this entire, new game, right? I mean, so like for example, we, went ahead with our iMobile Pay, which is a flagship, mobile application. We made it an completely, open banking architecture kind of a platform where you not only can make payment from your account through our mobile app, but also you can, make payment of any other, kind of, whether it is a wallet or a bank account through our, mobile app, right? So how do you kind of make, this more and more, open infra game rather than confining it to your rails only? Third thing is that, use cases, right? I mean, how do you, work upon new and new use cases and, keep kind of offering it to the different sets of customers? So, it's a very, India is a very heterogeneous country, right? I mean, you have, we can talk about people with, mobile phones, but there are also, set of customers who are still on feature phones, right? I mean, so do you also have a product, on the payment side, which, they can using feature phone make the payment, right? So I think, and fourth is when you are getting into this game of, digital adoption, the awareness, is very important because with it, it comes a lot of frauds, a lot of, scams, right? So many times customers don't know, they are not supposed to share their OTPs, their passwords, right? So banks are also investing heavily in terms of creating this customer awareness that, while, we are driving this bandwagon of, easier and simplified payments, but it's also important at the same time to build those, secured, kind of security aspect of it. So, and then the other part is about how do you enable your core systems, how do you build more APIs on your core systems so that you are able to partner with more and more, front-end mobile apps, right? For example, Google Pay, the backend is, all banks, right? I mean, it's a front-end where the entire backend transactions are processed by the bank. Now, given a, kind of, let's say, if banks were not geared up or not prepared, I think Google Pay cannot, operate the way it is operating, right? So I think, at the bank end, there's a lot of investment which has been made in terms of, creating that middle layer, which is kind of driven by more APIification, which helps, in turn to partner with a lot of front-end, apps. And I think those are the some, few things or factors which, probably, banks or financial institutions have kind of invested into, which is in fact you see driving a lot of this, scale and growth in the, the payment ecosystem.
Thanks, Hitesh. So generally I know Vishwas has a very less of smile. I'm sure he was back of the mind, he was smiling because we had the discussion saying that he wanted to open a nodal account about a decade ago, and incidentally the bank did not have APIs. So he's having a nodal account with you guys. So I think that So I'm sure he was smiling at back of his mind. So this question, Vishwas, because you've been, one of the veteran in this space, looking at the future, what do you think is that will act as a horse to again take this, the speed and the pace will continue, or probably accelerate much more further when it comes to, or it takes it to the next level?
So if you look at the next decade, you need in the next horses, I think two things fundamentally is, one is a mindset change, and second thing is globalization. Both are coming in a big way, right? When you say mindset change, today even you see the Prime Minister saying that you just walk out without carrying any cash for 5-6 days, you will survive just with UPI and other things. So the whole focus today is on the ability to pay, which I think is already sorted, because there are like 700-800 million debit cards in the market, 200 million plus now UPI, there are credit cards, there are wallets, there are other things. So the ability to pay is sorted. The focus needs to change to ability to collect, right? That, once that fundamental shift, that if there are 1 billion Indians who have the ability to pay, why can't there be 1 billion Indians and businesses with an ability to collect? Which is very simple, in a simple manner, just download the app and start collecting. Why can't a coolie just take out his mobile after carrying the luggage and just accept a credit card on his phone, right? That ability to collect to 1 billion Indians and businesses is where the focus should be for the next tech growth to go in. Other thing is globalization. Now, globalization, if you see today, earlier it was all America-centric, right? Because if you have a card network, even your local Indian laws and bylaws was written by some person sitting in the purchase office in New York, right? By the global networks. Now, localization is the key, and that opens up a big opportunity to the fintechs. If you remember in 2014 when Putin invaded Crimea of Ukraine, right? So Obama there sitting in the White House did a sanction against the card networks for operating in Russia. So suddenly you would see on Bloomberg and all the TV networks, all the Russians standing outside the ATM networks, yet my card is not working and other things. So this opened up the eyes of every regulator in the world. So now if you see across the world, the opportunity has opened up is where every central bank in every country is going in for licensing of the payment system providers. They are acting for data localization in their own country. They are asking for, having their own network, just like how we have an NPCI and RuPay card. So these are the opportunities that are opened up. So as we take our technology stack abroad, it opens up a lot of for us to grow internationally in various markets which are high these things. So I think these are the few of the horse macro things that will drive in the next decade.
Yeah, thanks, Vishwas. I think rightly so. As you would hear, that from a UPI standpoint, that is something a WIP, right? I mean, from a cross-border. And yes, it's a process which will take some time, but definitely I think there is a potential to kind of exponentially grow. Rahul, this one is for you. We talk about volumes, we talk about the client experience and all, but one of the tricky one to you was in terms of the cost. Indian customers are very cost sensitive, right? I mean, no one likes to pay, even I don't like to, when it comes to transactions. So considering that, how can someone continue to remain in the game?
Yeah, that's a very interesting question, and actually to some extent a little bit controversial question as well. See, in general, the margins for payments business in some of the developed countries, other countries, is almost 3 to 4 times of what we have in India. And then the real question comes, whether there are enough kind of margins within the payments business to kind of plow it back to continue having more innovations within the payments ecosystem. But I think India has its own solutions, very unique to the way we have. Like, we have been able to get to moon at a fraction of cost of what of the other countries have done. So I think India has its own set of unique solutions. We have to figure it out. And I think one obvious solution, which most of us hear, is through payments, a lot of data, where the data can be used for lending. And while it is one of the solutions that we're thinking about, at least I think there are 3 or 4 more levers to really see how probably we can get more, lower cost or say higher margins in this business. I think first is to, and Vishwas talked about mindset, and maybe I'll borrow this word to kind of talk about this. The mindset of about when you think about online payments. Today it's almost like, and frankly I think charging consumers for payments is going to be very difficult. But if we are able to provide right kind of services to the businesses, I think they would be happy to pay for these payments. I'll give an example. Today, everybody thinks of, or most of the business think of payments as a cost of doing business. But how we change the mindset and say, okay, payments is about getting more revenue for a business. And to have the solutions around this, like affordability, right? The banks have EMIs, there are some new affordable solutions. You can't do it in cash, right? It has to be online. So whether there can be right kind of solutions in affordability, which rather than being just a payment option, can become a revenue driver for the business. Say the affordability is visible when the customer walks into the store rather than when they are paying in the store, or when they are searching the catalog online rather than paying. So it's really like, loyalty, rewards, and points, those work far better in an online payment ecosystem than, say, a cash transaction ecosystem, right? So there are ways to really think about payments as something which improves revenue for the businesses, and therefore they should be able to pay more for those payments. So that's one of the levers which is actually, I think, working when we think about it, Razorpay. The second major way, I think, is about how we can build services or products adjacent to payments. How we can do smart routing of payments, which is higher success rate, or whether we can closely integrate with, say, the procure-to-pay platforms to make business payments far more seamless, or whether can be solutions like UPI plugins, which helps merchants to create their own handles and therefore closer control over the consumer. So this is about thinking about not payments as just from where the transaction starts to stops, but all other adjacencies around it, and as a bundle, can we kind of get a better solution to it. And third, also, I think within payments, there are opportunities to make kind of better margins versus probably standard payments, like, for example, cross-border. And today morning also, there were some discussions around how India is focusing on significantly increasing the cross-border payments volume. It's also coming from the fact that most of developed countries has like close to 20% of cross-border payments. India has single-digit percentages, and there are some pools in Forex, etc., to kind of make money. And last, which I believe is very important, and also kind of borrowing from Vishwas on globalization, most of the fintech companies have built platforms for India and in India, and they have seen the scale and the volumes, which probably makes it really easy to take it to some of the other geographies as well. Now you have fixed cost here. If you can scale over multiple geographies, you can start making some better money. So these are some of the things that I think, and we're also kind of experimenting around those. But fundamentally, I think consumers, I think, going to be very difficult to make them pay for the transactions, because ultimately they see it as a cost of transaction, not in any other way, which is adding value, what it does for the businesses. And by looking at these 3 or 4 things, I think there's this opportunity to see how we make kind of good margins, reduce costs, increase revenue, and get enough funds to kind of plow back into the investment to make all these new innovations around payments happen.
Okay, thanks, Rahul. So in short, figure out another avenues in terms of a cross-sell opportunity wherever it is possible, and give value-added services, as you would say, where customer is happy, willing to kind of extend or provide that extra buck. Thanks, that was very useful. Hari, this question is for you. You've been on both the sides, both on the consumer and the merchant side. What are the kind of new opportunities you could credit due to this exponential growth?
So 2 things. One, yes, India has a very large young aspirational population, 60% of the people less than 30 years of age, right? Creating the awareness first, which is what has happened in the last decade to it. So the cart has been made. What is the engine that is going to drive the growth? Yes, transactions have helped to create multiple use cases, as what Hitesh mentioned, right? Data is helping to create multiple use cases. One strong use case that we see is credit, right? For the young population, yes, where is growth? Aspiration is here. While aspiration is here, the means to the aspiration, there is a gap between the means to the aspiration and the aspiration, right? And how does that get bridged? The bridge happens through credit. And I clearly see the digital transactions providing the avenue for bridging this gap with credit. We heard in the morning as well from the BCG discussion, 36% of the digital credit is being facilitated through fintech. It's not about generation, it's also about taking the customer through the journey. This is from the, not just from the consumer point of view, also from the merchant point of view, it is helping credit being delivered to the merchant on the transaction page, meaning a lot of aggregators provide this as an additional service to the merchant because there is understanding of what is the business the merchant is being able to generate, right? And the second trend that I see happening over there is convergence of multiple form factors. I think we've created multiple form factors for facilitating awareness for consumer at convenience. But the next decade is going to happen by providing multiple form factors into one. If somebody wants to scan a QR onto it, add a mobile POS onto it, whether it is UPI or a card, everything is available in one single go. And how can that form factor become much convenient to manage, and the acceptance network growing onto it is going to be the key for the future.
Thanks, Hari. Probably the last question, and if time permits, we can actually open for a couple of questions to the panel. So, considering all this, what do you see are key challenges or threat in near future for this horse not to be connected to the cart, or what are the enablers in a long run which will help us to, this horse cart to move to the next decade?
As I mentioned earlier, right, we need to create a lot more awareness about, within, the customers, right, and especially, and it's specifically for, customer who are kind of, newly started to learn, digital payments, where, there are a lot of frauds and a lot of scams, which are prevalent, and many times, when you ask certain set of customers that why are you not comfortable, making a digital payment, I think the obvious, the reply is that, one is that how I don't know how to use it, maybe for a certain set of customers, and second is that, I fear that if I lose my password, if I lose my, OTPs, what will happen, right? I mean, third, and the second thing is also about how do we get it to, let's say tier 3, tier 4, level customers, where can we offer a lot of these solutions in vernacular, because still predominantly all our apps we are seeing, are largely, in mainstream English or Hindi maybe, right? Kind of, many customers which are in the hinterland, they want to use these, platforms and apps, but if we try to kind of make it available in vernacular, I think that will be another, enabler. Apart from that, the voice will be another big thing, where today if you see on Google also 20-25% of the search are, voice search. So can we also enable, customers to kind of, use this, platforms using, can that be, more voice enabled, right? I mean, the other aspect is that, as, kind of, my other, fellow panelists mentioned that, payment as a business, very thin margins, right? I mean, so how do we innovate and create, more products and services, which can be monetized using payment rails, and payment can actually become a base core support function and not a, a business where I aspire to make money, right? But on top of it, I build a lot of, services and products through which I can monetize it. See, monetization is a very important aspect of it, right? I mean, if you don't create a right set of monetization structures, I mean, there is a limit to which, people will keep funding it. So, as a society and all of us, I think we'll have to kind of think it thoroughly that, while, the services, quick services or quick payments are good, but also one needs to kind of, be cognizant of the fact that all comes at a cost. So one needs to also create an enabling framework where, we are able to monetize, some of these, services. Yeah.
Yeah, thanks. I will just add a couple, like all the points were relevant, and I'll just add a couple of more points to it. I think in general, we have been very progressive in terms of having different policies, different interoperable frameworks to kind of enable payments and banking in general. I think more that can be done, for example, interoperable KYC, etc., which can help smaller merchants to come online faster. I think that's one thing probably which can be done to enable the acceptance of payment faster. I think the other element I would think about is also, like, for payments to happen, there are multiple technology players or banks which come together. And with a lot of new things happening, whether say on UPI credit or QR payments, etc., I think there are some very big use cases where still technology breaks. Like, for example, payment on delivery. Still there are big challenges where the payments happen, the consumer would say payment has happened, but the delivery guy has not accepted it. How do we have some kind of more seamless technology solutions to kind of enable this over a period of time, I think is something which would be very important. And also in general, I think our overall regulatory framework has been far more kind of supported in expanding the scope of payments, and something like OEIF guidelines, which are coming to kind of also increase the overall amount of transaction value for cross-border payments. So I think things are broadly all in the right direction, but primarily, again, the right technology, the right focus from the regulators is what's required to kind of make it to next level.
Okay, you want to talk about the challenges, the payment systems. So essentially, it's coming from three parties, right? The first is the banks, second is the government, and third is the VCs. Okay, now going to the banks, right? As the transaction increases, right? A lot of, see the UPI transactions, when you say 46% of the world's transactions, real-time transactions, the scalability of the banks have to test, real waters, their core banking solutions. Today, a lot of issues that we face from the banks is primarily for that reason only, right? So second thing is that they are making, all the banks are profitable, but the scaling up of their core banking is the core for the future growth of the payment rails, right? And ultimately, all our others are just routers or in-betweens. Second thing, banks also, UPI also, it became zero MDR. We worked with the government to get some kind of an incentive scheme going. So last year, 1,500 crores, this budget, 2,400 crores. And you heard the finance minister say that 92% of the UPI transactions were done by the fintechs, right? But still, none of the fintechs has seen a single rupee of this 1,500 crores, or now this year's 2,400 crores coming to them. So most of them are doing just gratis UPI processing. They don't need to look at as a revenue accretive, but they are looking at least basic cost subvention so that they can also survive. But banks are appropriating all the incentive that the government is giving. So that's one big challenge that we are facing, and I will be very blunt with it. Second is the government. Now, government also, nowhere in the world does any government make anything like a transaction free. You have a low MDR, it makes sense, where everything system works. But when you make it free, then the ecosystem suffers, right? And the ecosystems today, it's growing, no doubt about it, because many funding, summer was going on, heat was on, and UPI was a good customer acquisition, so the growth happened, everything happened. But ultimately, anything free won't last for long, and being on incentives. So there, where the government comes in trying to play such games or putting in such rules, is little detrimental for the overall growth financial that, because today we don't even have a 4 or 5 unicorns, and in China maybe whatever, maybe a closed ecosystem, but there are still decacrons there in fintechs which have made real profitable money in billions of dollars. Third thing is the VCs, right? So when the funding summer was going on, they put in like in every other vertical they go, right? Fintech caught their eye, And in every other vertical, the biggest loss maker is the market leader. So what happens is that those who are playing the logical business game, right, those who are playing fully compliant, following all the rules, laws, they put so much money into it that they have to grow so fast. So many things, many merchants get access to Indian financial institution which should not be getting. What that indirectly relates to with that kind of a growth is that a lot of laws, rules, licensing comes on to the other players who are following the law. So these three things are the danger mark. I think now funding winter is going on, but does not take time for change again to summer. So I think if all these three guys, these are the little dangerous question mark for the overall future growth of the fintechs.
Sure. Since multiple stakeholder hats have been worn, let me wear the consumer hat in this transaction. I think payments is built on trust. And for trust to be improved, it's going to improve the consumer attention towards the digital transactions. For trust to be improved, I think reducing the amount of exceptions or helping the consumer at the point of exception will become a key. While most of the infrastructure has gone in terms of building the transaction processing layer and improving them and giving forms, I think a robust dispute resolution is key from the perspective, is what Hitesh mentioned about frauds and scams, is on the awareness point of view. But even if a consumer who is aware about how to do a transaction, but if the transaction is failing, I think holding that consumer at that point in time and investing in handling a dispute becomes key from a consumer point of view.
That's very useful. In short, I guess trust, security, awareness, use from a customer standpoint is important. So I think that's an enablers. I understand from a threat standpoint, which was 2010-9. I still recollect our prepaid card discussions. So we can have an offline discussions, and I think there are definitely ways and means to kind of address this cost aspect. Unfortunately, we're running out of time, so we could not take any questions. But yeah, I mean, panelists are going to be around. Anyone can actually connect with them and ask, any questions. Thank you very much for the session. Thank you.